Defence PSUs is where everybody is been talking about. First, this mega, massive, I like to use the word giant bull run, and now a subtle correction has kicked in. Now we may optically look at the Nifty and say markets at an all-time high, but trust me, under the surface action in some of the defence PSUs is not all that exciting if you really look from the recent high. So Kunal, what is the data indicating?
So it's interesting, Nikunj, because the setup for defence stocks, we know of course over the last 2 years how these stocks have performed as an overall basket. So we've broken this up into two parts: the large cap defence names, the more prominent ones HAL, BAL, and the mid cap ones likes of Mascot, Dog, GRSE, etc. Now the two bunch of data indicates that the recent correction for the likes of HAL, BAL is almost to the tune of 17% to 15% broadly, which means 15% more or less for the larger cap names from the July highs towards the current closing price for yesterday for these stocks. But the mid cap end of the defence stocks, they've corrected by a margin of 30 to 35% broadly, which means that the pain in the large cap stocks is much less as compared to the pain in the mid cap stocks. Not just this, what we have done is over the last 4 years, from 2020, we've assessed that when were the major periods of correction for these stocks. An interesting set of data points indicates that the likes of, for example, BEL, Cochin Shipyard, Mascot, Dock, all of these stocks, they have corrected below their averages so far. So, for example, if the average correction for large cap stocks was around 20% to 25%, the likes of HL and BL, they've corrected 15% to 17% broadly, which means there could be a residual correction of another 10%, even if you go by the previous averages corrections for the stocks within the defence pack.
So the stocks which have fallen less, for example HAL and the other large ones, what are the chances that they could fall much more and this could be an average 30% correction?
Exactly. So even if you assume that it's more or less a very similar correction in the last 4 years, these stocks, they would probably fall by another 5% to 10% before we find a major bottom for themselves or a mean reversion which has gone into the historical terms for these stocks. The mid cap end of the defence stocks, the likes of GRSE, Mascot, Cochin Shipyard, etc., these stocks have corrected slightly above their averages or the previous last 4 corrections for themselves. So if their previous corrections were 32%, 35%, these stocks have corrected by 37% to 40% as well. So which means what could now happen is that rather than a straight fall for the entire defence stocks, you might probably see the defence stocks getting into a more fragmented sell-off. Only few large cap names, they could probably continue one more leg of correction. The mid cap correction could halt, they could go into a zone of a pause. But as an overall basket, if you look at this over the next 1 to 3 months, there could be an overall residual correction of another 5% to 7% in the entire defence sector.
Okay, so mid cap defence, don't go short, don't sell if you own them. Large cap defence, the big ones,
correct,
like HL would be a big one, BEL would be a big one. A 5 to 10% correction cannot be ruled out.
Correct, absolutely.
Okay. All right, so that's fantastic data that where the defence stocks are headed in the near term.